So we've had a big announcement today, actually. Powell spoke at Jackson Hole and said rate cuts are expected now. The assumption is that they're going to do it now. Because before, Powell was saying, no, we're going to wait and see what the data says. And the data has been getting softer faster. And their soft landing narrative is in jeopardy. So they have to stop. Well, I mean, they don't have to stop, but they're stopping because they want to preserve what they've built so far. So contrary to popular belief, this is actually incredible. The fact that they were able to reduce the rate of inflation without completely destroying the labor market. Because what you're doing is you're restricting the money flow. And when you do that, a lot of these businesses that are kind of on the edge can't keep going because it means they need another loan and they already have too many loans, or they don't have enough collateral, or whatever it is. They're just maxed out. So to keep up and get a loan is not an option. Right now, we've got a market that's been trending up and people thought it should have broken down more. That's what always happens. I mean, that's what people don't get. We get to these points where we get these nice drawdowns like we had just a couple of weeks ago. The market just kind of dipped. I've actually got it on the screen right now. This is Friday's action when that was announced that, guess what? Rate cuts are coming. Oh, money's going to get cheaper? Well, what do you think's going to happen? The people that couldn't borrow might be able to borrow now. Or at least they feel safe enough to do it at whatever rates. Because what the Fed is signaling is that they'll back them up. This was like a 2-year span of the Fed saying, we're just not going to back up as many people as we normally do. And they did that through various means. So anyway, we've had this run up. People thought it should have gone down more. It didn't. The yen carry trade was a scary thing, and it's still an issue. It's not like everything just went away. You know, that's one thing I've noticed. Every narrative just kind of gets forgotten about, and they don't account for it anymore. If you watch any media program, they're like, oh, well, we had this thing that happened last week, and everything's based on that now. It's like, why? We have so much going on, and there are players that are so big. If you want to pay attention to where you can make the real money, it's where the big players buy and sell. Everywhere in between is a gamble. If you just wait for the big companies to make their move, it's a different level of volume, and it's a different level of movement. If you look at the options on these companies, they're terrible. They don't make any money. You know why? Because they're not volatile enough. Every time those flashy companies go up and down, they just kind of sit there. But nobody's watching them. They're just watching the other companies and thinking the whole market's in trouble. The Fed just said, hey, it's okay to spend money. So they're probably going to spend money, which means the market's probably going to go up. But is it going to happen every single day or right away? Or because there's fears too. The fact that they're willing to raise rates means they're actually worried now. See, they weren't going to do anything until they thought something was going to break. And now they think something's going to break. The question is what? Because people have been telling them everything. It's like everybody knows what's going to break or what's breaking and what's going on. It's everywhere. But nobody's paying attention to like all of it at once. They're kind of in their own niche looking at like, I got to solve just this thing. Yeah, maybe you do, but the whole thing's going to continue to move and you might just get stuck there. And somebody else might solve it for you and then you don't know what to do. So it's better to just like look at everything, generalize what you can, and then move on with your trade. Don't sit there and try to find like the perfect angle. That's all my trades are now. This Starbucks, for example, I have it down here in the bottom of the screen. This was my most recent trade that I would consider a real trade. I only take a few real trades a year now. It used to be that I was taking trades multiple times a quarter and going like, yeah, that's enough. No, these are, you may not get one an entire year kind of trades. But this was something that I thought would happen. Starbucks is just something that has what I like. And the basic features are, it's a company that is a solid company you can go into or you can interact with in some way. Just a really big company you can actually verify is doing what they're saying, on the outside at least. It's got to be a really well-established company that has a good balance sheet. Even if there are problems at the moment, historically has a good balance sheet. And is something that you don't think is going to go away. You can hear people talking about it, but it's like, nah, there's stuff is bad for them, but it's not that bad. And it has to have come down quite a bit. So basically, if you just watch a stock, a really, really good stock that you know shouldn't be down, even if it's not one you normally follow, you're just like, hey, I know that company. Why are they down that much? That's weird. And you start looking into it. They just keep falling and falling and falling. Watch that for a long time. I don't mean days or weeks. I'm talking watching months, quarters, years. Because at some point, you'll see a stock that gets pushed down to a level that it can't go any further. And it just sit there. So Starbucks, for quite a while, was just flat. Because it was the same thing they've had for a while. The problem is, they've gone through at least a CEO or two since I started following them. And this newest CEO comes from a company that's just been pumping. Chipotle. This is why people are excited. Like, well, they just got a CEO. That doesn't matter. Oh, yeah. All right, look at Chipotle. Let me switch this to a longer term time frame. All right, so Chipotle has just been up for years now. It pumped up to $3 and came down. And people thought, oh, that's done. This is Chipotle. People were just ignoring it. This is a few years. It went up and went down. People thought it was done. It was going sideways. But the market was going up. Even if they haven't made all the right decisions in the world, it just ends up going up continually. But they were stable. And this is a split adjusted stock, by the way, because this stock went from the low hundreds to like 3,000 something before it split. It was incredible. It was always up. And now they're moving over to Starbucks. That could rejuvenate things because they have somebody that they say doesn't understand the product. If we go back to Starbucks, they didn't pump like this. Starbucks was in trouble for a couple of years. We had a gap down. We had some sideways action where it didn't crash below that for a very long time. We had a company that peaked and just kind of trended sideways and came down. And you'd think, Starbucks? Yeah, I know they had the problems with the labor unions and things like that. It got to a point where they couldn't go any lower. I was watching them for a while and I thought, this is a good place to grab premium and these gap ups are rare. I mean, this is a once in a decade trade on this company. I mean, I'm going back slowly, but this is years of data right here. And there was a pandemic. And while it was going on, while everything was going on, they were giving out a dividend. See, that's the thing you have to realize. A dividend stock is guaranteed money. So even if the dividend's going away, it's still guaranteed in the meantime. And they have a base value they won't go below. And if you really want to understand, the price support, look at dividend stocks. Just watch how they move every day. Whatever their chart looks like long term, they look like they just sit there every single day. It's like, oh, they're down, and then you ignore it, and they're right back up. A few months later, you go, how'd they get back? I thought they were down. It's like, no, they're a dividend stock. They pay you a base amount, and there's a share value associated to like the whole company and all the assets and everything. Like, there's so much value in the company. Normally, you're just going to get movement like this over time. It's going to follow the market and it's going to pay out. So even if the market drops at a certain point, people can put X amount in, get X amount out. So it has that basic value. And if people say, yeah, I can go lower than that. Yeah, it can. Try it. Seriously, go ahead. Try to short it. Try to wait for it to dip below that point. I guarantee you'll miss it. 2 years of data, it's been going down. Every pump is destroyed. Which is also why when I got in this thing, I thought, I'm out of this right now, because even if it's back at this level, every time it has these pumps, it just gets crushed. We are not in an environment where it can sustain that. They're excited. So they're like, if we have somebody that runs the company, we'll pay this much for it. And there were other people that thought, well, it can only go so low, so I'll buy their bonds. I'll use the stock as like a synthetic savings account with decent yield. And in something that even if, like during the pandemic, what happened to Starbucks? It was open. It was doing things. It was a coffee shop. It was a drug store is what it was. It was a legal drug store that's just mild enough so it's okay for people to be on caffeine in public. People neglect the fact that just because it's not crack doesn't mean it doesn't have strength to it. Anyway, the point is, it's been trending down for a long time. It has these pops. It doesn't sustain. And the news that got it up there was good, but it wasn't fundamental. It wasn't physical value change. So those people that are arguing that there is no real value that has been exchanged yet, they're actually right. Until the CEO provides ideas that get the company back on track, it doesn't count. So for now, it's a nice move for them at this point. But it had this huge jump, so I got out because I didn't want to lose everything. And it was nice because it's been holding tight. And I thought this thing was going to take off afterwards because we're in a bullish environment. Now people are realizing, okay, this is a good amount. It's enough to where it's believable. Even if you disagree with it, it's still believable because it's historically at a point where there has been support. Over long-term declines, it bounced there multiple times. This whole range here, it's not just this one point. It's like this area up here, if you go across, has kind of a point of change repeatedly, whether it's up or down. And then this down here has a lot of movement. So you have a lot of people basing their risk out of this point. Even if they're recent traders, it's still a lot of risk. Kijichi, what's up? Love your div stocks. So small gains, but for every month or 3, get an extra chunk of stock. There you go. See, that's the other thing about dividend stocks. They grow themselves. That's my basic goal with everything that I own. I'm just trying to get to a point where it can sustain itself long term. If I stop putting any money into it altogether, it's still moving on its own. And it's doing it more and more every single month or quarter. And here's the thing. You think you're clever. You're like, all right, I'm going to set one up for each month. So I'm going to look for stocks only in these months. And that is so hard to do. That was so brutal to be like, well, I like these ones, but I have to settle for this one I really don't like to get the dividend on each month. And eventually I had a point where I'm like, all right, I'm happy with this. This will work. It's not perfect. But now they're all paying like at the same time. They just adjusted a little bit. Like, our dividend's going to move to this time. We're going to do this. And, just because they have a dividend schedule set up for a year or two doesn't mean it's going to stay like that. Because for a couple of years, it was like, hey, every month, this is nice. And then all of a sudden, it's just all over the place because things are changing. So anyway, back to the stock. It's trending down. It wouldn't go down further. And we got to a point where we've got earnings coming up. Everybody hates it. That's the other thing you have to have. When you're doing research on it, not just the media, but what do people on social media say? What's the overwhelming opinion? Some bulls, some bears, some people that are neutral. And when everybody hates that, and that was the key, right? Once it had come down for a couple of years, a year and a half, it gapped down. That's when people started hating it. And I thought, okay, this is where it's interesting to watch. Everybody hates it, big gap down. So just look for that. Don't even, for the very first thing, even if you don't know anything about trading, look for this nice gap down in a good company. And then what happens to it once it gaps? Does it keep going or does it bounce and then come back to that area and not go below it for quite a while? That's strong support. Every time it did this, it just got shorted lower and the bears kept thinking they were right because they were. Once they finally got this one, people should have taken gains if they were a bear. If you get a gap down and you're a bear, you take that. Just this on a big company like Starbucks, a historic move. Here's a better representation of what happened. There's the gap up. But in the weekly, there was just a huge candle. There's a gap down that was filled in the opposite direction because people know this stock well. So a gap means there really was a gap in intelligence as well. Some people had info that everybody else didn't. They knew that once it came to a certain point, it was worth getting into. And I guarantee you this is above that point. This is the thing you're looking for, a massive red candle down or a gap down on other timelines that won't go down any further for weeks. This is weeks worth of time. So months ago, the last earnings season, it just crashed. And it couldn't go any lower than that. In fact, it bounced. And this is when I was buying. The day that it gapped down and went crazy, I was buying in here. And I think I waited until it started coming back down and then buying in the low area here. Because it was coming back and testing that range. I thought, all right, this is about as low as it was before. The premium's a bit higher because it hasn't dropped. But it's still about as low as I would expect it to get before an event like this for a company like Starbucks. And Starbucks ended up just throwing a curveball. Nobody expected that not only would they replace their CEO, but they would get the best option that they didn't even know was available. That would be like your team getting the best player in whatever sport it is you like. It's a game changer. Whether it is or not remains to be seen, which is why it's been going sideways, because people know this company doesn't move like this without some kind of payback. If you're up a little bit on this or you're up quite a bit, imagine how the people who really hold the stock, the long-term shareholders feel, because they bought this. It wasn't you or me or any of this stuff we're seeing in the media that kept it there. It was the sleeping giants that came in and said, this is as low as it'll go. Not because they thought it was as low as they could go, but it was because they thought other people would get there first. They were too anxious. And it didn't go. This was the lowest point, even if it came back down. The premium, everything else, it was beautiful. That was the absolute only time I like to grab options or anything with high premium on a direct move. Like there was no confirmation. It didn't keep going for a while and do its thing. It was like, is this as low as it goes? I don't know. It's extreme for this stock. So I'm just going to go ahead and buy some of this since it's super cheap right now. That's what I did. I just snagged everything I could. And when it pumped a little bit, I got rid of a bunch of it. And as it came back down, that's so it wasn't just about like getting some and then doing a little more here. It was actually about getting a nice batch of it and then trading some of it as this was going on. Keeping some of it long term for a retracement of something like this. I didn't quite expect this, but I expected, one of these days to get like half in one day. These are weekly candles, so this all didn't happen at once, but getting a daily move that moved as much or more as the range we've created. That's what I was looking for. And it did. It kind of just blew that out of the water. It was crazy. And now I'm out with everything. I didn't want to keep a little bit. I almost did. I sold most early in the morning on this one And then later in the day, it really pumped, and I thought, oh man, I sold a little bit more when it was down a bit from that point. So I was thinking, it's Starbucks, it's coming back, and that worry got me, which it got a lot of people. But that's still, it didn't matter. I was fighting over pennies at this point. There was no way the gains that I got from this were going to be gone by the time I got rid of everything. And that's what I ended up doing, just dumping everything, kind of trading it in here, just loading up heavy and being a little bit overweighted on it, thinking like, I kind of want to trim some. And as it started to come up, I didn't do it right away. I waited a couple of weeks at least. And then it was like, all right, we're getting up to this peak point repeatedly. And I got rid of it somewhere in here, except for a few. I wanted to keep my base shares or my base contracts available. And once it got down here and had this big up and down, that was when I added a little more, expecting, hey, earnings is coming up, right? And this is a little bit after earnings. So, yeah, earnings is coming up. And it kind of just sat there after earnings. So I thought, all right, whatever, no big deal. And suddenly the announcement comes out. And that I was good with because my contracts were 2-year contracts. I was buying the longest dated ones I could find. And that ended up being great because the premium on those is extreme. You can look at the Greeks all day long, but it's going to move way more than that. Every single option you see, the farther out you go, is much more solid as far as your ability to buy and sell it at least somewhat of a reasonable price than anything else. As long as you're not playing with stupid dates and stuff like that. If you're going with high liquidity dates, you'll be able to move where you need to move as long as you play it right. So that's what I did. I got lucky on this one and had the right mindset going into this and not dumping it after it didn't do anything. Because my expectation was if it drops, I add. Because I didn't have as much as I had right here. I had probably about 1 3/4 of what I had then. And I wished I had more than what I had then. So I was looking to get a little bit more once we had this volatile week. I bought a little bit, but I thought, this has been going down for a while. I better not get too far ahead of this. Well, boom, we had that movement before I could actually do that. And it was still an amazing win. This is probably an even better win than the TKO one was earlier in the year. I've had like 3 good ones, I think, so far. 2 really stand out wins, but a few like minor ones too. Not to mention just the share gains and the dividend gains. I'm looking for more yield if I can, but it's not. I don't sacrifice the health of the company for yield. That's one. It's a difficult sacrifice to make because you'll look at these companies like IEP, right? Icon Industries, Carl Icahn. He's the guy that got in some massive fight with a dude on CNBC, another huge hedge fund guy. We ended up with this mess because I didn't know this. I just did not pay attention to this company. Everybody in the media that was like just a regular figurehead, I wouldn't deal with that. It was too much work to try to see through everything that they're doing. I would just kind of, all right, what do they say? I get an idea of who they are and then dismiss everything else. So I finally looked at stock and I was surprised that they were paying for a $35 stock. You could make $2 a share in dividend, which is insane. That's usually you don't find anything anywhere near that high. I was looking at it said the yield was, and I don't know if this was before or after this massive scandal happened where they realized, they're backing their assets with nothing. Not all of them, but like the new loans, the stuff that they're building on in recent history is backed by stuff they don't have, basically, or at least they have to prove that they had. And that's where we're at. We're at this point where I'm sure they didn't have some of it, but there's still more going on. I really don't know. I never cared about this guy because he's just one of those, another talking head that would come on and say stuff that would annoy me. And now we've got his company going bust. And I'm thinking like, yeah, he had an unsustainable dividend. That's why. They have to continue doing everything else they're doing. They have to pay back all their loans. They have to keep all those they're responsible for other parties' trades and things. Like, it's a mess. Every single one of these entities has so much attached to it. And to be able to dedicate over 20%, it was like almost a quarter of everything was going to dividends. They're paying a quarter of not just their profits. No, they're paying ridiculous amounts of money to keep this going. They were going under because they had to keep a Ponzi scheme going, basically. It was like, we just need new money to repay the old money and keep the image going. I don't know the specifics, but like that's what it sounds like to me. They were basically trying to back things with stuff they didn't have, and they're saying they have it. And I don't know what's been proven since here, but this is a massive drop. And it was kind of a hit piece by some company, but it's that's the other thing too. Like, I don't pay that much attention to all the short sellers. I know the ones by name when I see them, and I know their opinion because I've seen them for years. But it's not worth getting too into these guys because they have one specific job. They have to tell you everything negative. And they say they have to be partial and tell you the positive stuff. But no, if they're short, they have to do everything in their power to get you to sell. They need you to get on their side. And they need to drive the price down because they're borrowing. What's short selling? It's another form of borrowing. And it's irresponsible if you don't have the collateral to back that up, which who knows how many companies actually even do at this point, because it's possible to get around things. And look at companies like Enron, right? Back quite a while ago now, they were the biggest company, and then people realized, oh, they're backing everything with fake companies that have fake revenue and fake reserves, and everything's been shifted through all these different entities to hide the debt that they can't pay. And it's just the same story, but way more complicated and way more public. Because it was probably just a hustle from the beginning. Some companies are legit companies, but they're there because they're a stock, not because they're a company. And it's not like this was something that was created by somebody and got taken over and became... No, this is an artificial entity that has probably changed hands many times and eventually has a reputation of being something solid. And when you're new to everything, you think, oh, everything... I'm only researching the last few years and all this other stuff. You don't really pay attention to the fact that a company's only been around for 3-4 years, which it seems like a lot at some point. If you're like, oh, 3-4 years, they know. No, dude, there are entities that run for years that are terrible. And sometimes tickers change hands. People buy these things like domain names in different clever ways to hide what they're doing and just sell it. Somebody wants a clever, set of letters or something, and some random dude just bought it because he thought it was funny. He wanted to make his own stock. He's got enough money in some trust fund and is literally just any idiot like us, but with the immense power to be able to move markets. Anyway, I'm off track yet again. And this was an example of a company I didn't pay attention to. And I should have, because they were paying a $2 dividend for a $35 stock. And it was unsustainable. They got to a point where they had to keep increasing to keep people from going away. So it was like, even if the paperwork was bad on them, they still had a reputation, and the guy was still out there doing his thing. It's like, do you really want to short this guy who's still out being a billionaire or whatever and doing all his billionaire stuff? Yeah, of course, even if he's in trouble, he still has the fake money to be able to do it for as long as the fake money's been promised to him. As long as he can at least provide some level of collateral, or what looks to be believable enough collateral. So... who knows what's going on with this? They cut their dividend from $2 to $1, which is still insane. So I looked up the yield, and it said like 23 something percent. I don't know when that measurement was taken, because that was just the quick look at it. That's what you get now. You get like the AI suggestion. It's like, all right, I'll go with the AI suggestion because I have other things to do. I can't look into this too deeply. It's like, all right, somewhere around a quarter. That's insane. Even if it's after this move, I don't even want to know. So... this was a crazy find, and it's something I'm watching now because it's interesting, but I'm so tempted with that dividend to just get some for a while. You're like, man, you could get $1 a share for a $15 company right now. That's at least has some real entity, even if they're in trouble. It's not like some random ticker on the OTC markets that you don't even know if they have real assets. You can't find anything on Google Maps about it. It's like, this is a real person you see in the media every day who you can go to their massive firm somewhere and it looks like they're doing something, but it's probably for show. I think that's how these firms work. They have these big showrooms that they do their business in with clients, and then they just have like sites where the people that do the real work do it unbothered. And really, because at some level you have to be kind of a genius or something to be able to move markets even with the power that any entity creates, because there's an equilibrium to things. It's not like somebody does something and then everyone else just throws up their hands and goes like, oh, I guess because one thing changed, we're done. You know, the bears are like, oh, what if this happens? Well, people still need to get stuff done. So they're going to find an alternate way to get stuff done. And the people that have job sets and skills in those areas are going to migrate their way to whatever that system is. So it's better to just pay attention to it. And if it goes, try to migrate to the next system. And if it doesn't happen, okay, well, worrying about it wasn't getting you anywhere either. So just look at what's going on with the stock and try to put everything else out of your head. Be as centrist as you can when you're looking at how these things perform. I guess that's the last thing I should add to the list. You need to be able to kind of not mute your own feelings about a stock or your own thoughts. You have to be able to look at it as if those weren't even your thoughts. You have to be able to see through the perspective of people that completely disagree with what you think, and see not only like, not, okay, why, but how does it make them feel? You have to feel it as well. You have to be able to like absorb that whole thing. And if you can do that, you can see where these things are going to go. And I don't know this stock well enough to be able to see this one, but there are people that love this. And this flat movement over the last, however long this was, I guess year or so, you know, I don't really want to get into it yet. Even though it looks like a nice trade if I knew the company, I don't know it well enough. And there's the last point right there. It's not so much the trade that you're willing to take. It's the one you shouldn't take. Not just the one, all of the trades that you shouldn't take. That's how you're successful. Not making sure you find the perfect one. It's that you limit the bad ones. So even the ones where you watch them and afterwards they do what you thought, but you go like, yeah, but the setup on that was ridiculous. I couldn't have really done it with that setup. That's not it. That's not the thing you're looking for. You know, and it's still something you need to be able to give up. And it's going to look so close and you're going to be so desperate, but it's hard to give that stock up. But if you do, then you eventually find these Starbucks. So I could sit here and watch IEP all day and try to get this $1 dividend and hope the stock doesn't go down to like 10 cents or whatever. Some of these people, even if they're famous, everything can really look at Rite Aid, right? Rite Aid is still active. There are Rite Aids all over the place. But I'm looking at its stock like this company is done. This company it's not even tradable on most applications because it's in a sub-penny stock category. It's off all of the regular markets. It's got a different ticker symbol now. It's going from like a tenth of a penny to maybe a penny, sometimes 5 cents, on record days 10 cents, but a lot of times below a penny. And how far do those zeros go? I don't know. Sometimes the zeros go farther than you think. And other times it just pops and you think, wow, that could have been life-changing money. Yeah, it's just not worth it though. But Starbucks? Is it doing that? Is Starbucks at a point where like you go into every coffee joint and go, hey, there's nobody in here? No, everywhere's packed all the time. Even at weird hours there are people in there or people that are on their way to go there. It's insane how that drug works. And it's pretty much everybody does it. And I think that's maybe the ability to trade is linked to caffeine, because it's like all of the people that are like hyper caffeinated and have that mindset, they don't do well. But the ones that don't have any caffeine and they just can watch for a long time, notice this, you know? And hey, people on caffeine can do the same thing, but you know where they're going to see it? They're going to see it here and here, and it's already happened here, so maybe there's going to be more here. Like, it's not going to go well for them. So if you can just remove yourself from the feeling of the stock and look at the fundamentals, are they good? Is it something you can interact with in the real world? Yes. Is it at a historic low, even if it's not an all-time low? It doesn't have to be an all-time low. I think it has to go to that. No, Starbucks isn't going to an all-time low with people in every single store all the time, except for the ones that are getting like destroyed or whatever. It's fine for now. They could be as in debt as they want, and they're going to be able to pay it because lenders are going to go, hey, do I want to loan that company that just opened the thing a day ago money, or do I want to loan Starbucks money to open more chains? It's like the people that wanted to borrow money before, what are they even going to do? They're going to set up their weird internet company to do something for other weird internet companies. That could be some, oh, that's the next, whatever. But it's not. It's never going to be. You're never going to find that. All right. That's the thing. It's like I don't like deterministic things, but that is absolutely like, it's almost an absolute. Every time you go for it, it's going to fail every single time. You'll see all the ones that work and it's just going to fail. So if you could look for a Starbucks and go with that, build up over time, don't get too greedy. And yeah, maybe you're not going to get as much as you wanted, but I didn't lump sum into everything halfway down this and then go, why did I do that for weeks after, just getting killed on premium? No, I bought way out of the bunnies that people didn't care about, had a huge spread, but a lot of volume. Got in at good prices and didn't sit there and try to I got to jump this spread and get, pay an extra $100 a contract. No, dude, it's not worth it. It's not worth it. If you can't get the strike you want, don't get it. That's the other rule about options. If you can't find the play you want, just don't get it. Stocks are more forgiving. You don't have to be quite as diligent with that aspect in stocks, although it's very helpful. But in options, you absolutely have to do it. Because decay is going to kill you. That's what you're fighting against time. And time is usually going to win. In the end, it always wins. But most of the time, it's going to win. Just like the casino. The house wins just a little bit over 100% of the time. And the most you're able to win is like 98%. But usually it's going to be like 90 or 89 or whatever. 92 perhaps. They set these odds and they're not perfect, but it's kind of the same thing with this. And if you can find something that you can get in where the premium just doesn't drop any further and the stock is stable enough, it's a good stock, well then, yeah, why not? Load up over time. That's what I did. Paid off. So that's why I wait months and months. I've gone quite a while without a real trade. I had that TKO trade early in the year, and then I had a couple of random ones that I'm not even remembering right now. And then finally had this one. I was waiting for a stock that was absolutely crushed. I didn't really get interested in it. I mean, I've been interested in it, but I didn't think about actually starting a play until this gap down. And that was the important thing. That gap down, looking at it from this time frame, was the absolute point that you would want to. Because when something like this happens, there's going to be a reaction. And it looks like initially it dropped a little bit. Not a ton, but because it was down, I'm not surprised. I thought it was going to go more with this sort of a gap. It's just bad earnings and everything else like that. Oh, that was the other thing. It was bad earnings, but not terrible earnings. That's the other thing. You have to be able to separate your emotions from what you think earnings should be and what you think like the nature of money should be and all that. If you could just set everything to neutral and look at what they're doing with that, I am so surprised this didn't go lower. And the fact that it bounced was very encouraging. So on that day, I got some stuff, and I may have upped a little bit after that. I really don't remember. The whole thing was kind of a blur at this point. But I know this gap was where I got interested, and I may have even, I think I did buy the actual low at some point. Maybe not the low of that day, but the low day. That trade was great. With this much green, these are miniature squeezes right here. And it's also a return to the mean. When it drops to a point, because at that point, this is where people aren't letting it drop further. This is where even if there are more sellers, there's still entities that can eat that up. And they're willing to lose a lot of money as it goes down. And that's the mindset you have to be in. You have to be ready to say, like, if this first deployment of cash doesn't work, what do I do? I need to be able to have multiple deployments. So I have to dollar cost average. And if it doesn't work, that's why it's better than lump summing. Like lump summing, if you're right, yeah, it's life-changing. But it's you're not going to be right. That's the thing. But if you can dollar cost average, you'll do it, and then it'll go up, and you're like, yeah, okay, now I can't buy more because it's way up. Sure. But you move on to another one at that point. You don't keep chasing that one. You think, I'm going to do it, and if it doesn't do what I think it should do, I'm just going to take my gains. And it doesn't matter if it's $1.50. It doesn't matter if it's $1,000. Whatever the gain is, you just take it, get out of it, you look for the next one. That's what saves you money. You don't make very much or anything. Maybe you even still lose a little bit of money. On a move like this, it's going to be hard to do that. But on something else like these little moves, after it gapped down when I was playing this whole thing, not looking for this, just looking for this, it was a good place to be. So I took advantage of that and hoped that it would come back down. Usually when you let it all go, at least except for a little bit, I never let everything go, but I let all of my tradable stack go, and was just hoping it would come back. Oh, and it did. That was great. It's like let a little bit go, let a little bit go, and then watch it drop. And think, oh, I should have gotten rid of that last one. That's what I was thinking. That whole thing was, oh, I want more. I should have taken that. No, I got plenty. One was perfect. Having one contract through this was the greatest thing ever. Because then, before this even bottomed, the premium on those contracts hit a low, and the spread was not that bad. I thought, here we go. This is why you buy the high volume options. Because when stuff like this happens, and you need to dollar cost average downward, then you have some support. Because if they're chasing it from this high, all of the people trading this entire section right here got wrecked. Everybody that was in and out on these big moves, they did well. And they were loading up through here. As I was watching them going like, it's not dropping. Nice red days or a chance to add. So that's what I wanted to talk about. We're getting rate cuts. That's the main thing. Powell has announced that he's basically guaranteed we're going to have rate cuts. And that was huge. It's been years since we've had cuts. It's been 2, basically. That doesn't seem like a long time because it's not. But it really is in the sense of what's been going on financially. Because we were at a very different place, and we're so close to all-time highs. Are we in the same place we were when it hit all-time highs before? No. We're in a wildly different place. People are like, oh, was it better? Like, no, it's better now. We're in a better spot now. And economically, not economically, I should say from a company health standpoint. We're in a better spot now than we were at the peak in 2021. So it makes sense to me that the market continued. And we end up with this. We end up with companies that move massively. So Powell's rate cuts are going to be, it's going to take a while for that to sink in. Because most of the time the market's been begging for rate cuts forever. Every single meeting, it's just rate cuts this. It didn't used to be that. It used to be a mix of things. But the last meeting was literally every single interviewer asking them for cuts. Not even one person just going the other way. They're like, cuts. Because everybody knows that cuts mean medium-term profits. Everybody pays attention to the long term or the short term. The medium term is where these moves are made. So that's what I'm doing. And the way you pay attention to the medium term is you focus on what the short term and the long term are doing. You see how offset they are from each other. And then you side with the one that you know is coming up. Because if you're emotionally divorced from this company, you know this gap is insane. Even if there are problems that they announce. Basically, they just didn't guide as well. Like their numbers had some problems, but nothing to justify this. It was the fact that they guided differently and they had other random things coming up suddenly at that time, which is why it's hard to play binary events. Or I should say, it's easy to play binary events and have just massive gains. But if you go for them all the time, you're going to miss these ones. This was an obvious one. Came down, bounced, came back down, stayed there, bounced repeatedly. That's a company that is being held up by something powerful. So I went with it, took my gains. Even if it keeps going, this is great. You can make more on these gaps than you can from a nice trend up, especially if you're going with anything that has a time duration. If you have time decay, you can't do those trends. You got to be on the short side. You have to sell options when things are moving slowly. I like to sell puts. If you can get the cash together to sell low price stock puts, you can find some actually decent stocks that are, you're not going to make the Tesla money on them, or I should say the Nvidia money now. You're not going to make the Nvidia or even whatever the new Nvidia is about to be, because Nvidia is kind of slowing down. It hit that 140 peak and they're still not over it. You know, when a stock gets to that point and it has to come down a little bit, it's hard to tell where the bottom is because there's so much value in Nvidia, but there's just also, it's so overblown too. The haters are right. They're 100% right. This is a split adjusted stock, but I mean this thing was just insane before it split, and it's becoming insane again. It went down to about 90. Here's the thing. When it was in the 90s, I was like, dude, if I owned Nvidia and if I had the cash for Nvidia, I would be buying this thing hand over fist. but I didn't want to say anything to anybody because this thing was getting like absolutely hammered at the time. It's so hard to just say like, hey, this stock is actually going to be the one that you want, but I know if I say it, the thing's going to completely ruin people. So I was like, oh, but this has to be it. And sure enough, it bounced. So some people took advantage of it. Appreciate that. And yeah, so I'm going to wrap things up here. It's been kind of a long day. I had to get everything going from scratch. And I basically wanted to talk about a few. Oh, yeah. So talk about the Starbucks thing. That was look for the trade. Or the trade to look for is the one that's beat up that it's got support. It's had a massive gap down, or it's had a bunch of red that completely looks overextended. And signs of a good company being overextended to the downside. And a big gap like Starbucks had, perfect. And then going the other way when support holds, easy. Look for these companies, pay attention to them for a long time before you actually make a decision. But when you see a company that again and again overcomes things, those are the opportunities. I knew since it had been down so much already, a gap like that was just the last gasp of the medium-sized whales getting out of their positions and being completely done. But the more money you have, the longer you can hold on. But it's all about your patience, and they gave up. So with stocks like Starbucks, that's an easy one. But like I said, you only find these once or twice a year. I used to like to say once or twice a quarter. No, you find these things once or twice a year max. So if you get 2 or more, that's a lucky year. I haven't been doing it that long. I've been making more trades recently, but the last like 1.5, 2 years, I've been just really backing off on a lot of these trades and waiting for the Starbucks trades. And Nvidia was one I've wanted to get into for a long time. It never had the decline that I was comfortable with to get in. I guess that's what I buy. I buy bounces, long-term bounces. And I guess that's the difference between me and bears. I'm not trying to go bearish or bullish. I'm not super bullish either. I'm just into these companies. Like, okay, if I'm so bullish, how come I got out the second that I had those massive gains in Starbucks? Why didn't I ride them up to the sky because I liked it so much? No, that's not how it works. You have to look at what the actual money is that's flowing around. And if there's a base value in the stock, it approaches that base value, and it has a hard time going below that. That's an opportunity. I watched Starbucks for years because here's the deal. I owned Starbucks back in like 2019, 2020, somewhere in there. And I got rid of it when it was in triple digits. I bought it in the low 70s in like whenever it was in that, maybe it's before 2019, but whenever it was in the low 70s, it was it had been lower, but it was bottoming out in like a recent term trend. And it was doing well at the time as far as business, probably even better than it is today, but maybe not, at least in what you would see. It seemed like more people were there than I guess came after that because there were competitors that started to move in. But anyway, it was just a great trade. So I want to talk about that. We're most likely getting rate cuts, which is going to be bullish, but there's going to be some bearish action too. We should have a response to any massive pumps we get from the excitement, because the reality of why we're raising rates becomes more and more apparent as time goes on. That's the key. So we're watching for the stuff that's actually breaking. All of those things that people are complaining about are issues now. It's not that they weren't before. It's that they weren't loud, and it wasn't that they weren't loud enough either. It's that they weren't ready for the consequences of reversing that path. The only way to get prices down is to squeeze everything at the same time. Everything doesn't get squeezed equally, yes, but it's all getting squeezed in some way. So it's like the thing I keep seeing online about autophagy, right? People like fasting or crazy whatever's to get autophagy, and it's your body eating all the bad stuff and creating good stuff. And I'm sure it's more complicated than that. But it's kind of the same thing that you do with this. You look for the stuff that you absolutely know down to your core is a good trade. So I guess that's the way I could finish it. It's not, you got to learn all the technicals, you got to learn the fundamentals, you got to learn the media side. So it's not just about the technicals or the fundamentals, it's also the media. You have to see what the narrative is on the company, and where that's mostly discussed is in the media. Even if it's forms of media you don't watch very much, it's still important to see and hear and read about what they're doing. It's a whole other world, and so the movements make more sense when you know that. So it's good to like immerse yourself in something you actually trade. So when I got into Starbucks, I started researching it. I loved it, and I owned it. It went up so much, I had to just get rid of it. Didn't have anywhere near as much as I wanted, but it was the early days of my investing and trading career, and I ended up just getting rid of it with a nice profit. So, and I'm glad I did, because it went a little higher and then it trended down for years. I think it had some bounces, but it never really got back up to the mid to high triple digits, 100 triple digits, I should say. But when it's back to where I bought it initially, I thought I'll think about it now. It's gapped down. It's where it was 5 years ago. Yeah, I'll go for that. And it's still Starbucks. It still has people there all the time. Yeah, absolutely. So it's a good trade. And the last thing before I go, the expectation is sideways until the election. And sideways means highly volatile, up and down, all over the place, but basically within some sort of a range. Even if that range has a trend, it's going to be a difficult trend to decipher, because there's so much that lies in this election for the market. You have two opposing candidates, basically. You've got higher taxes and regulation and lower taxes and regulation, and how much they're harassing the cryptocurrency space. Those are three important points. The crypto one doesn't matter quite as much for stocks, even though now they're entangled more than stock people want to know, because it's mostly, the crypto people, they're in the stock world now. Da, 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 da. Yeah, I know they are. And that's like the stock world completely rules over most aspects of the crypto world. But there are still certain aspects that the crypto world the crypto world has an advantage to the rest of the stock market. A small group of people who don't have any power can move things. It could be some random person with a coin. It could be all these phantom companies with fly-by-night coins that they're just rugging in a day or two. There are literally tools you can easily get to rug things you make. It's like you just make a coin. It has no utility. It's been registered, and you at this point you just wait. You make it look like some trading's happening. People go, oh, there's actual volume here. It's not just one person wash trading. It's somebody using these easy to get tools to make it look like to basically wash trade without being detected. So that's the same thing every people have been doing forever. It's wash trading is basically just trading against yourself to artificially drive up the price, or trading against a friendly entity to drive up the price. It could be a couple of companies doing it, but usually it's like one entity doing it to itself with something that it created to look like it's another entity. And aren't most people. That's what you see in the news all the time. But this is talking about the fact that we're at a point where we're not going to go above or below a certain level. We're going to hit walls because the risk to either direction is too high at a certain point. If the market gets too high and the high tax candidate is elected, then there's going to have to be a correction for that, because people are positioning early thinking that the low tax candidate's going to get in. And that's all we have to say, because everything else doesn't matter in the form of trading. It's just what is the money-making stuff going to be right away and in the medium term. And with either candidate, the market can and will go up. But one candidate's going to pump the market more than they should, and the other candidate's going to restrict it more than they should. So we're going to have a huge movement in one direction or the other, depending upon who gets in there. For the market, this is the most important election we've had in a long time. For everything else, yeah, it definitely is too. But for the most part, it comes down to, if you're able to move your money the right way, you can make serious money going in either direction. So I'm planning to go with whatever happens in the short term. And then to figure out the medium term after that, I'll have to pause and figure it out. I'll have to do something then. Take some profits, wait for a while, see what happens. But I have my long portfolio, so if it goes down, great, I switch to the short side and I start making money there. Or if that stops, I just let the upside continue to grow. I have the dividends to keep paying me, so even if everything goes down, I'm still getting paid. And hey, maybe they don't go up as much as the flashy stocks, but they still make something. And it's a way to diversify your strategies. It's just a way, it's yield. It's different ways of getting yield. Whether it's stocks, whether it's bonds, whether it's Forex, whether it's credit, whether it's anything. You're just looking for yield in different ways. And some people want some gamma with their delta, but a lot of people just want to collect some theta. Why not do both? So I'm going to get out of here. I want to talk about a lot of this stuff more coming up. I'm going to be making some more videos because I need to explain this Starbucks thing in more detail because it's basically the core of what I do. These trades that I've been making for years now and are now the focal point of everything I'm doing are the things that work. It's limited. I mean, there's only so many things I can like guarantee work. But that's all you can get. You can only get, like, if you can get a little bit, not guarantee, I guess, but like something to where it's rarely wrong. And if you're wrong, you're easing into it so you're not absolutely destroyed. Because if I deploy a few payments and this thing just continues to knife its way down, then I'm not going to continue to trade that. But if I think something's exhausting and I'm coming to the end of it, I'll try to dip my toe in and see if it actually is. Because that's what I'm looking for. I'm looking to ease into a trade that has a long time turnaround. There you go. You get into all these. Nvidia got it. It's the end carry trade. A lot of that money from the yen was in Nvidia. What do you think? People are using Nvidia everywhere, every single market, in every single place that it can be that has any impact on the economy. Nvidia's there. So people have money in it, speculating on it way more than it's worth. Yes, for sure, but for good reason. Because in the future, if they're the company that runs everything, it would probably be good to have a little bit of that going into it. Do I think that's how it's going to be? No, I think it's going to be like Tesla, where something blows up over time, even though it's been gaining forever, and then it has kind of a humbling. Tesla's been doing that. It's been trading sideways. It isn't down. It isn't up. It's sideways. If you're looking at it long term, it's exactly where I expect it to be. And I've been saying forever, sideways. This looks like a long-term downtrend because it is, but it's not long-term. It's medium-term. And people confuse long-term and medium-term because everybody's either looking really short or really long. They're not looking for that space right here. It's like 3/4 of a year or a year and a quarter or something like that. Those weird time increments, not starting at right at the beginning of the year or right at the fiscal year, but starting at whenever big things happen and paying attention to, hey, the big thing that drove it down still matters. How does this up relate to that? And since we've corrected from that, how does that correction relate to this, which relates to that? And you follow the chain back until you get to a point where you realize there's a massive amount of support with the volume we're seeing in these plays. So when it comes down to a place where volume confirms and price doesn't move for a long time, everybody hates it, and it's a big company you can interact with, and you can get the play cheaply. You can get the premium that's not inflated, or you can get shares at the low end of the bid-ask spread easily. That's the time. So that's what I'm looking for. But thanks for hanging out. I appreciate it. I'm going to get out of here. Stay safe out there. I'll talk to you later.